Hey, welcome to another edition of the only weekend business program on Channels Television Capital Market. I'm Ladi Williams. Well, let's start off with the topic which is of much concern to every Nigerian across all walks of life, and that's talking about the Naira decline against the dollar and other major currencies. The local currency unit is kicking off 2024 with more weakness as it depreciated to 902 Naira to the dollar at the official Nigerian foreign exchange market. That's NAFEM. Well, join us now to talk about this is Samuel Shomi, a capital market professional, joining me right here in the studio. Great to have you. Good evening.
Oh, thank you for having me, Ladi.
Yeah, so definitely, personally, the decline I see with the Naira, personally, I'm worried, at this point. And I'm sure, Nigerians, at this point, salary earners, everyone that, earns in Naira is worried.
Yes,
At this point.
Definitely, everybody will be worried.
We saw the weakness in 2023, and that seems to be playing, into 2024. Talk to me about what you're seeing. And, we've been fighting inflation for a while now. Major economies are starting to see, some level of winning, when it comes to, inflation numbers. All of us increase rates, from all the apex banks, globally. How much of this, rate increases in Nigeria is playing into what we're seeing in the FX market?
Well, thank you very much. You started by saying the Naira has, depreciated a lot. Judging from how it started in 2023, and it has continued in that trend in 2024. And you also made mention of a particular, ingredient that is likely to be responsible for that, which is inflation. You understand? Because inflation, what it does to any currency is that it reduces the purchasing power of the currency. So much of what we are saying now is the adverse effect of the inflation on our local currency. And that has also added to the reason why Naira is losing, very much against the dollar. Definitely, there is need for everybody to be worried because salary earners, is not as if they are earning more. It's not as if employers of labor are increasing salary, but inflation is rising. And interest rate on the other side too is not really that much, strong enough to tame inflation. And that also adds to the fact that make the Naira to be depreciating against the dollar. You understand? So in all of this, I think at this point in time, the federal government needs to step up its game in terms of trying to create liquidity in the market and trying to stabilize the FX market. Some analysts have argued that lower interest rate is one of the factors that is affecting the local currency, and that is one of the reasons why the local currency is losing against, other currencies. To a very large extent, you may look at it and say they are right. But the angle at which I want to look at this is from the angle of inflation. Yes, there should be a direct relationship between interest rate and inflation rate. Interest rate is supposed to be taming, moving in the same direction as the inflation rate is moving. But one thing we must also understand is that one of the key, objective of the government will always be to look at price stability and financial market stability vis-a-vis creating employment. And how does government create employment, or how does CBN create employment? It's not as if CBN is going to be employing people or creating jobs for people to come and apply and employ them. CBN will create employment or will try to tame unemployment using interest rate. If interest rate is to be moving in direct proportion with inflation rate, it will have a negative effect when it comes to creating employment, because it will become disincentive to borrower. Corporate body will not be able to borrow at high interest rate. As we speak today, inflation rate is at 28.92%. The benchmark interest rate is at 18.75%. The gap is wide. We cannot say that interest rates should move pari passu with inflation rate. For instance, if interest rate is to be around 28%.
Because that means you're trying to fight inflation, but at the end of the day, you're killing development.
You are killing productivity.
Right.
Corporate bodies, borrowers will not be that at advantage to go and borrow. Definitely, there will always be two sides to every analysis or analyzing an economic indices. Now, we are looking at, should interest rate be moving pari passu with inflation rate? We know what will be the adverse effect of it. At the same time, to investors, to lenders, it will incentivize them because they are coming to earn higher return on their investment. But to the person that is borrowing, that person is paramount in the mind of the government because that is the person that is going to invest into production that will now employ people. You understand? So what we are saying that the government is doing is more of a balancing act. As you are trying to tame inflation,
right,
you must also try to tame the cost of capital.
Right, and definitely we've seen the APECON president there, talk about speculators at this point being the reason why we're seeing this weakness with the Naira, hoarding activities at this time. And at the end of the day, it almost seems like everyone is to blame with the Naira weakness, at this point, because at the end of the day, we're all trying to import, one thing or the other.
Yes.
So looking at, speculators in the market, is it possible to even tame speculators at this point?
Well, we must understand the dynamics of the FX market. It is more of an OTC market. It's not an extra, traded market like that. It's over the counter. And when we are talking about over the counter, it is not easy to regulate because it has different layers. At one layer, the banks are playing in the market. The commercial banks are key participants in the market. The BDC are key participants in the market. Then the peer-to-peer are also playing in the market. The large corporations are also playing in the market. So who are you going to chase? Definitely, speculation is an ingredient that every market operator use. Speculation is an ingredient. But be that as it may, what government can do, and like we've been advocating since last year, is to have a deep conversation, with the market participant. Have a roundtable discussion. I know for sure that the Apex Bank is currently working on the regulatory framework for the FX market. And like what the CBN governor said at the level of the bankers' dinner last year was that they are deeply consulting with market participants, which is fantastic. So through consultation and more of persuasion, we can now, make everybody to reason along the government and also bear in mind that the responsibility to make our economy strong lies on everybody. We cannot leave everything to the table of the government alone. The activity of everybody has an impact. So everybody has to put the interest of the nation at first, because we don't have a better nation than our country.
And if we were producing more, definitely we wouldn't have that taste or that penchant to always import, everything. Because I'm sure, Nigerians would love to, buy Nigeria.
Definitely.
If we have, more local producers producing the things that we like to.
Yeah, it's part of what can actually assist us to help our local currency to appreciate and value. Is that we must change our taste and fashion.
Right.
You understand? Nigerians have penchant for foreign products. How many of us put on locally manufactured, attires?
Right.
How many of us patronize the local, manufacturers of consumable items? You understand? So we must understand that the more we patronize foreign products, the more the local currency will continue to suffer, because demanding for
the government can also, create that enabling environment where most of these things can be produced, most of these goods can be produced, cheap, within country. I spoke to a tie maker one time. I asked him, why don't you produce ties in Nigeria? He said, no, it's cheaper for me to actually import because I don't have power to actually and, you know, power the machinery to make this happen.
Yes, that is part of it. And that's also one of the reasons why I quickly, talked about the cost of capital.
Right.
You understand? That is also what government is looking at and why it is not increasing the interest rate to move as quick as the inflation rate, is to make sure that at least you allow the local manufacturer to breathe. So some other thing government could now do is to invest in economic infrastructure like power. Last year, we saw the last administration, towards the tail end, remove power generation from the exclusive list and put it under the concurrent list, which simply means that each state government can now go into power generation. So that responsibility rests on each state to look for how to attract foreign investor and even local investor to invest in power sector, into power generation. Nigeria, our energy demand is around 15,000 megawatts. But where are we today? You understand? We are far, far behind. As we speak today, I don't think we are generating up to 6,000 megawatts for an economy that has a demand of 15,000 megawatts. So a lot needs to be done in that.
So much needs to be done. But let's look at the market is unified now.
Definitely.
But after unification, how transparent is the FX market in your view?
Thank you very much. One thing that unification, does is that it creates transparency. What the government did is to move away from the old regime where you have multiple, exchange rates. What are those principles that guides multiple exchange rates? A lot of it is arbitrary pricing. You peg, you don't allow market forces to determine. Once you don't allow market forces to determine the value of any instrument, it is not transparent. And that makes investors to be skeptical. So they'll be scared away. They won't want to come and play in your market. So that was what the current administration tried to, to remove by unifying the exchange rate, telling investors home and abroad that now we are trying to create a transparent market where the forces of demand and supply, we account for the value of the currency. So in a way, it's a form of transparency. More than that, what we will now expect is in the area of consultation. Now, the CBN governor assured Nigerians that they are in deep consultation with market participants. But this consultation must be unified. You carry everybody along. Once you carry everybody along, that modicum of transparency will become to filter into the minds of everybody. So that by the time your rules comes out, it will be acceptable because they will know that we all have our input. We were carried along ab initio. So that is another thing that will engender transparency in the market.
Right. And definitely we want to see, transparency going forward. 2024
definitely
is still fresh, and hopefully at some point we get to see strength, with the Naira, with your recommendations to the government there. Thank you so much for coming on Samuel Show Me, Capital Market Professional, and sharing your Saturday with us. Thank you so much.
It's my pleasure. It's always nice to be here.
All right, so well, this week on Friday, we had that a lot happened on the NGX, on the floor of the NGX, and we see the sound there's closing gong, being rung by the group chairman of Odu'a investment company, Otumba Bimbo Ashiru, on the floor of the Nigerian Exchange Limited to signify the close of trading for Friday. Well, it comes as the management of the conglomerate indicated interest to list the group on the exchange in a bid to raise capital from investors. The group chairman says the move would not only strengthen the company's financial position, but also provide opportunities for investors to participate in its growth.
Market close.
We are diversifying into energy, real estate, which Odu'a used to have the real estate business, but now we have moved the whole real estate business of Odu'a into Wema board. So we have a lean holdco to operate with, which is better for us. We're into energy, we're into hospitality, we're into healthcare services, we're looking at that too. And we've had it before. But what happened was, even we are into, we have Ekwe plywood, which was there before. But the point is that, don't forget that it was an establishment that during the military regime, they took over, and but now we are bringing everything back.
The domestic stock market sustained its bullish momentum for the third consecutive week as the bourse recorded gains on all 5 trading days this week. At the end of the trading week, the market key indicator, that's the all-share index, closed the week way above the 94,000 point mark. We year-to-date return currently at 26.4%, making it the best performing stock market so far in 2024. The remarkable feat was largely driven by robust investor interest in diverse stocks across the industrial, insurance, oil and gas, and consumer goods sector. However, trading activity weakened compared to the previous week, with the total traded volume and value decreasing by 9.4% to 12.4%. The shares of Initiate's tops list of 81 gainers up nearly 60%. Royal Exchange led 57, others down by more than 22%, while the trio of Transcorp, Giants Bank, and ICO were the top 3 most actively traded stocks for the week. And we see sukuk, a financial concept rooted in Islamic law, is gaining popularity right here in Nigeria, with news of oversubscription, coming up every now and then. Well, joining us now is Akwawe Oputu, a chief dealer at Lotus Bank. Great to have you, Akwawe. Good evening.
Good evening. Thank you for having us on the program.
Fantastic. So we're seeing sukuk is really growing now in popularity in Nigeria. Talk to me about the prospects and why investors shouldn't miss out.
Okay, so people are not very familiar with the sukuk bond. The sukuk bonds are actually issued by the federal government to actually raise capital for projects that are Islamic driven or Sharia compliant. And we've seen a lot of investors' appetite in that project. Recently, we had an oversubscription in 2023 at the last bond auction. So it actually shows that investors are actually keen on investing in Sharia compliant instruments. And the returns we see from these instruments are actually very good when you compare them to other bond instruments in the market, trading around 15.75% for a 10-year paper is actually a good return on investment when you compare with other bonds. So we've seen a lot of investors' appetites on the sukuk bonds.
Talk to me about the difference, between, the sukuk bonds and, conventional bonds.
Okay, so unlike the regular conventional bonds that represents debt, which is backed by the issuing a financial institution, which is the federal government, the bond actually gives opportunity for investors to actually have ownership of the underlying asset for which the sukuk has been raised. So most of these sukuk bonds are actually issued to finance roads, capital projects, infrastructure. So it gives the investor a sense of ownership that they actually see where their monies have been put into, unlike the regular debt and bond instruments. Also, the returns that they get, the rentals can be tied to these projects. Well, unlike the equity or the other bonds, you can actually see where the federal government has actually invested the product. So it gives a sense of belonging that you're actually putting your funds to do infrastructure projects and actually grow the economy.
So like, driving through, VI, where you see the sukuk banner, you see the roads, were actually developed, by funds there. So if I'm an investor there, I say, oh, my money actually went into this, creating this road. But can I sell a sukuk bond in a secondary market?
Yes, the sukuk bond is actually listed. You can actually go to the FXDQ Security Exchange Limited, also in the Nigerian Security Exchange Limited. You can actually approach a bank wherever you have invested in this security to actually buy or even resell the instrument. So it's listed, it's traded on Bloomberg. So just like your regular bonds and securities, the sukuk bonds is listed there as well. You can buy and sell your securities.
And take, for instance, I'm an investor, I've invested in a sukuk bond. How do I get, my returns, from the investment?
Okay, so at the first time when you actually request to invest in sukuk bond, you fill a form and your details are provided on that form, your bank details. So you approach the bank. When the sukuk bond is sold, they're actually giving, the instrument is given to a custodian or the CSCS. So when the instrument is received, it is kept for you, and an investment advice is given to you at the time where you invested the bond. So you receive your rentals on the sukuk bond. It's actually paid semi-annually, so you get your rental income twice in a year. And if you hold the bond up to the maturity date, so you receive the principal at the end of the tenure of the security as well as the rental income. So it is as viable as every other financial instrument, the bond out there.
Well, what if I don't want to hold it to maturity? What can I do? I don't know if you heard me, Akbar. Yeah, what if I don't want to hold it to maturity? If I don't want to hold the sukuk bond, to maturity, and I say, okay, you know what, I want to cash it out.
So, like I said, the instrument is tradable. So you can approach any security dealer that is authorized, any financial institution, a bank, authorized dealer, or a stockbroking firm to actually resell your security. According to the Central Bank of Nigeria, it is liquid, it's very liquid, it's tradable. So you can exchange it and flip it at any point in time if you don't want to hold the instrument. Wherever you have purchased the security.
Oh, fantastic. I lost you for a moment there, but I guess you're back now. But, still trying to, educate the viewers, at this point. What's if you invest in, a sukuk bond, what's the, evidence that you actually, invest in? What are you given, to show ownership, of that bond? Okay, I guess.
DMO.
Okay, fine. I can hear you now.
Okay, sorry about that. At the point where you purchase security, the DMO actually releases this instrument to whatever custodian you must have purchased the instrument or the CSCS. So they issue you a certificate, and the certificate carries the units that you have purchased, the amount, the principal amount, the rental income. So you are given a certificate that shows that you have invested in the sukuk, and when your rental income is due and how it will be paid. So the account number you have provided on the form is actually where those rental income will be paid into. And at the end of the tenure, you get your principal back and the rental income that is due to you. So a certificate is actually issued when you purchase the bond.
Fantastic. Thank you so much, Akbar Putu, for bringing us up to speed on how to invest in sukuk bonds and what to expect in 2024. Akbar Putu is the chief dealer at Lotus Bank. Thank you so much for coming on.
Thank you.
All right, finally on the program now, let's bring you some of the key expectations for Nigeria's capital market in the coming week. First on, we see the list of fixed income market. They're expecting the Q1 2024 FGN bond issuance calendar to be released by the Debt Management Office. That's the DMO. At the bonds market, traders expect yields in the FGN bonds secondary market to trend upwards in the medium term. And over to the Treasury bills market now, where traders expect yields to climb higher on potential liquidity squeeze. At the same time, the CBN is expected to hold the NTB primary market auction on January 24, where it's expected to roll over 231.82 billion naira worth of maturities. All right, so that's the show today. Thank you so much for watching. I'm Ladi Williams, and definitely be looking out if we'll see the bulls again maintain dominance in the equities market. Bye-bye.